JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 10th of August 2020, so yep, welcome everyone. Welcome to this Monday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, let's have a quick look at what's happening here globally in terms of the coronavirus. Now, of course, unfortunately, the figure continues to rise. We have climbed, well, according to some sources, we all have already climbed above the 20 million mark. So, yep, of course, we'll continue monitoring this. The good thing is that over the weekend we saw a bit of a decline here, so that's great. And if you remember last week, I was saying that let's see if this actually forms some sort of a head and shoulders pattern. Of course, if we can apply technical analysis on this graph right here. But again, hopefully this could work out as a head and shoulders pattern, and hopefully this could drift lower. But again, it's not as simple as that sometimes. So yeah, let's continue monitoring this, guys, and let's hope that the figures continue to drop. Now, jumping into a few indices here. Now the first one on the section here is the Shanghai Composite. By the way, Nikkei is closed today due to a holiday in Japan. So yeah, Shanghai Composite here, you can see it is pushing nicely to the upside. It's in positive territory, and look at this this level right here, the 3,336 zone. I talked about this last week a lot, and basically what I was saying, that if this area continues to provide decent support, then yes, an up move here could be possible towards the towards that 3,457 territory right here, marked near the high of July. So yeah, we'll keep an eye on that one first. But like I said, for now, everything's kind of working out nicely. You can see that yes, on Friday we did have a nice drop lower. However, it ended up being a false breakout, and the candle kind of closed above this 3,336 territory this morning. It did act as a good area of support again, and from where the index kind of rebounded and pushed higher. So yep, we'll keep an eye on that one. Again, for now we're just aiming for the 3,457 territory right here, and then we'll take it from there. Now jumping into another index, it's still closed, but we'll open up soon. The German DAX here, it ended the week last week in the positive territory. So yep, that was great news. In a way, this could lead to some higher levels, but as I've mentioned before, guys, ideally a push back above the at least a push back above the 12,773 territory here could do the trick for more buyers. However, also we'll keep an eye on this 12,913 zone. Yep, and then yes, like I said, a further move higher here could lead the index towards the highest point of July here, near the 13,314 mark. So we'll keep an eye on that one. But again, for now, we need to see at least a push above the 12,773 territory. In looking at the cash index right now and where it's currently balancing at, we can see that the price is roughly around this level actually. So if we get a nice pop above it, then aim for those slightly higher levels. Now in terms of the downside here, we'll take a bit of a careful approach, maybe a bit of a more of a conservative one, and wait for a drop below the low of the 30th of July here around the 12,254 zone. So a nice good drop below it could, yep, open the door towards lower areas, because this would confirm a forthcoming lower low, guys. And again, for now, be very careful. We're very close to this 12,773 territory. A nice good pop above it, yep, could open the door towards higher levels. Jumping into another index, and this one is a dollar index, and last week I can see that on Friday, for example, it managed to recover somewhat. However, what I was saying previously, that in a way, in order for us to kind of aim for some higher levels, we need to see at least a pushback above the 93.81 zone right here, in order to consider maybe a bit of a larger correction to the upside. And yep, I'm saying that this is a correction because we're still trading above this, below this downside resistance line taken from the high of the 23rd of March. So in a way, like I said, in order to aim for a bit of a larger correction to the upside, we need to see a push above the 93.81 zone. So keep price on down. In terms of the downside, we would need to see this one dropping below the 92.55 territory, because such a move would confirm a forthcoming lower low, and yep, further declines could be possible. Now jumping into gold, and gold, after hitting the all-time high near the 2075 mark last week, the commodity started drifting lower, and Friday saw this one drifting back below the 2034 territory, roughly around here, but it kind of closed on Friday just bang on that area. Today, although we did already have a bit of a decline here, you can see that this area, the 2034-35 area, kind of attracted, acted as a good magnet, and yep, the commodity, the precious metal, kind of drifted back to that area. So for now, it's stuck here. And in a way, for us, let's say, to consider lower areas on this one, well, I mean, of course, a drop, a drop below the 1981 territory right here could do the trick for more sellers. However, to be honest, this could drift lower, but it could find support somewhere near this 1940 zone, roughly around here. At the same time, it could test also the 21-day EMA. So basically, this could be still a bit of a tricky one. So if this gets dropped below the 1940 territory, now this is where it could become a little bit more exciting for the sellers, but only probably up until this upside support line taken from the low, the 20th of March. So, and now, like I said, for now, in a way, the commodity here could go for a bit of a correction, could go for a bit of a larger correction. You could keep an eye on this 1981 zone, but what you could also do is, and let me just quickly grab this one, you could also measure the Fibonacci's here, because so if we take it like this here, take this little kind of up move, this little strong up move that we had here from the around mid-July, then you can see that, for example, the 23.6% retracement is somewhere around near the low of the 5th of August, and that's approximately around the 2008 territory. The 38.2 zone is around the 1967 mark. But again, this is something for you. And additionally, for now, probably just focus on some of these key support and resistance levels. And like I said, it in a way, the precious metal could drift a little bit lower. If it finds good support here near the 1981 zone, it could rebound and make its way up again. So something for you guys to consider. Now, silver. Silver is also kind of in a slight correction mode after Friday. Well, actually, this morning, I mean, we're seeing a bit of a push higher here, but nevertheless, it kind of it's probably correcting higher within the correction. So if we can put it this way. In a way, for us to aim for some higher levels, well, we would prefer to wait for a push above the high of last week near the 29.86 zone, somewhere around here, and then aim for some higher levels, because like I said, this would confirm a forthcoming higher high and more buyers could be joining in. In terms of the downside here, a drop below the 26.20 territory here could maybe do the trick for more sellers, and we could see this one sliding a little bit lower. But again, if once we get closer to one of these levels, then I'll reevaluate this again, and for now I'll take a bit of a neutral stand on this one, because it would, again, we did have a nice rally last week, so maybe a bit of correction here could be possible. But again, like I said, once we get closer to one of these levels, I'll reevaluate this one again. Bitcoin is making its way higher, so good news for the buyers. As you can see, this 11,843 territory, I talked about this one last week, and basically what I was saying, that we keep on having these overshoots, but we're not really getting that daily close above it. So right now we're seeing a strong move higher. Again, the day is not finished, so yeah, let's see how all this is going to play out. But of course, for now, everything's looking quite positive. It broke this 11,843 territory. Now it's approaching the 12,097 territory here, marked by the current highest point of August. But if that gets broken, then yep, the crypto will confirm a forthcoming higher high, and the next target here to keep an eye on could be that highest point of August of 2019, and that's roughly around the 12,325 zone. So so basically just took a year to get back to this level, approximately around there. So like I said, for now it's looking quite positive, but let's wait for that push above the current highest point of August near the 12,097 zone. Jumping into AUDJPY, and here the pair is quite interesting. I mean, we are still below this 76.79 territory. I talked about this level previously, and what I was saying, that we need to see at least a break above that, and ideally we'd like to see a nice daily candle kind of staying above this area before, let's say, considering higher areas. You can also see that the pair continues to kind of float above this 21-day EMA, shown as the yellow line. In addition to that, I mean, we can also draw here an upside support line, which coincides with this 21-day EMA. So basically everything's kind of still leaning a little bit more to the upside. However, as I said, we will wait for that push above that 76.79 level first before aiming for some higher areas. In terms of the downside, if this suddenly starts breaking this upside line and drops below the 21-day EMA, and also falls below this key support zone around the 75.16 territory, which is, as you can see, previously acted as good resistance, then support. If it drops below the 75.16 territory, then yep, we'll aim for some lower areas, guys, and we'll aim for the low of the 12th of June, somewhere around here, and yep, we'll take it from there. But again, for now, we are still leaning a little bit to the upside. However, we need that confirmation break here above the 76.79 level. Similar story here with US dollar against the Japanese yen, and of course, overall, we are still trading below this downside line taken from the high of the around the 24th of March. But given that we recently had a nice reversal here from this level right here, let me just grab this one, yep, from this 104.19 zone, we had a nice reversal from there, and yep, then it kind of started pushing higher. What I was saying last week, that the pair seems to be flagging out here. It looks like a nice bullish flag, potential bullish flag, but what I was saying last week, that in order to aim for some higher levels, we need to see a nice good break, and ideally the daily candle remaining above this 105 territory, 105.94 zone, or you could round it up towards the 106 zone. So yep, a nice, good, strong kind of push above the 106 territory, and at least if the daily candle remains above that 106 zone, then yep, in a way higher levels could be met. This morning we saw a nice push north. It did break that area, but kind of, as you can see right now, is drifting back down. But don't get me wrong, the day has just started, so everything can quickly change again. So like I said, for now we're keeping an eye on this one. If we do eventually see that nice daily close above this area, then yep, we will aim for a bit of a larger correction to the upside towards this downside resistance line taken from the high of the 24th of March. GBPZD, so this one is doing everything what I was talking about last week so far, of course. What I was saying last week, that in a way, if it struggles to overcome this 200-day EMA straight away, it may correct a little bit lower, but keep your eyes on the 1.9638 zone marked by the high of the 12th of June. And as you can see, it is acting as a very nice area of support. This is what it did on Thursday here and on Friday, so it struggled to move below it, and now this is the result that we're having. The pair is once again trading at its 200-day EMA. So in order to aim for some higher levels, yes, ideally a stronger move above this 200-day EMA could do the trick for more buyers, and then we could aim for that psychological 2 level. Again, for now, of course, we're still more bullish than bearish. Probably I'll take a bit of a, maybe a somewhat, well, should I say, cautiously bullish approach. But yeah, be very careful. For now, you can see that the pair is getting a hold of near this 200-day EMA, but a further push above it could, yep, open the door towards that psychological 2 level. In terms of the downside, then, well, we could look at some lower levels if we get a drop below the 1.9475 territory right here at the same time, and that's, by the way, the high of the 24th of June, and at the same time it would also place the rate below the 21-day EMA, and maybe more sellers could see this as a good opportunity to step in. And finally, Euro USD. So here the pair is doing what I was talking about last week and in the beginning of this last week, that if it struggles to overcome this 1.1909 territory, then it could drift back down, and basically this way kind of confirm a bit of a range here. So yeah, right now it's doing exactly that. It's drifted in Friday. You can see it kind of had a nice reversal to the downside, drifted lower. So in a way, for now, what I'm going to be aiming here for will be this 1.1725 territory. For now, I'm not going to drag this one way too much to the downside here, although maybe a bit of a larger correction to the downside here could be possible. However, if you want to consider that idea, wait for the daily candle kind of remaining below this 1.1725 zone, and then yes, we could maybe consider a bit of a larger correction to the downside towards this upside support line taken from the low of the 14th of May. However, if this area here, this 1.1725 zone, does provide decent support, then we could see this one rebounding and making its way back to the 1.1909 territory. So again, for now, like I said, we'll take a neutral stand on this one. In order to aim for some higher levels, of course, we need to see a push above this 1.1909. But to be honest, until the pair gets closer to that barrier, well, like I said, we will remain neutral here. And like I said, as long as it kind of stays in this little range. So guys, I really hope you found it useful. Thank you very much for watching and listening. If you want to catch my video later on, my traders tea time is always 13:15 GMT time. But for now, guys, I hope you have a wonderful trading day. Stay safe, both health-wise and market-wise, and yeah, everything will be fine. So have a nice trading day today, guys, and I'll see you later. Thank you very much, and bye-bye.